have we got right this year? Well, I'll tell you what we got right this year. In our strategy portfolio, we have been mostly in the US markets through IVV, which is the S&P 500 ETF, through NDQ, which is the NASDAQ ETF, and through SEMI, which is the semiconductor ETF, which includes NVIDIA and TSMC and has ridden the whole AI wave. At the moment, we also hold a gold 10% holding in our strategy portfolio in a gold ETF. And what we're getting right by default by investing through Australian listed ETFs, it's simple stuff. Australian listed ETFs giving us exposure to overseas markets. Now, one of the big risks for next year is that the Chinese economy does badly. Everyone's talking about Chinese stimulus being needed, and if it doesn't happen, and if Trump follows through with penal 60% tariffs on Chinese goods and other tariffs, and inflation comes back and interest rates go up in the US, then one of the themes for next year will be the US dollar going up and the Aussie dollar going down, plus the Australian market going down, because if China goes in a hole, we're going in a hole with it. So one of the obvious themes, and of course things could change tomorrow, but one of the obvious themes going into next year is that it is likely the Aussie dollar will fall against the US dollar, that the Chinese economy will be weak. And if you consider that, one of the biggest drivers for next year for Australian investors should be trying to get money out of Australia into things priced in the US dollar. If the US dollar is going to go up, get rid of your Australian exposure because China's going nowhere and the Australian economy is going nowhere. Get out of Australian dollar-denominated things into US dollar-denominated things. So what we've done this year, which is to be in the US market, is going to pay off doubly if the US dollar goes up and the Aussie dollar goes down, which seems likely at this point in time. Could change tomorrow. So one of the themes for next year is to continue to do what we've been doing in the strategy portfolio this year, which is to invest from Australia in US dollar priced stocks, which we do if you're buying the S&P 500 or the NASDAQ or the semiconductor index in the US. They're all priced in US dollars relative to the Australian dollar. You'll make more money in overseas investments than you will sitting in Australia. So in the resources boom, everybody bought BHP, Rio, Fortescue, and not only did they catch those prices going up, they caught the Australian dollar going up. And this is called this was called double bubble. So if the Aussie dollar is going to go the opposite way and resources are going nowhere, if we invest in the US next year, we'll get double bubble in the other direction. And that looks to be a fairly safe strategy for the moment for next year, is get your money out of Australia.